So guys, I had a chance to dig back into the data again last night after I dropped my video. Not just the headlines, but really looking at the individual memory stocks, trying to understand what influenced their trade last week, seeing if I could pick up some sort of signal that I could share with this channel to give us an indication of where this trade was heading next. And while I was doing that research, I had the great opportunity to engage with so many listeners on the channel and answer their questions from last night's video. And it dawned on me that the questions were all falling into the same two categories. The first question, it all focused on Samsung. What is going to happen when Samsung releases their preliminary results next week? How do I think the market will react to it? Will we see a similar type of reaction like we did with Micron's quarterly earnings, or will the market react differently? And then the second bucket of questions was really, what's the best way to trade in this sector right now? As an individual investor, should I move my funds to Roundhill's new DRAM ETF, or should I continue to try to pick individual winners within the group? And so as I was engaging with the listeners and answering those questions, it made me realize that these are not two fundamentally different questions. This is one question. This is one big test, I think, that the next week is going to prove to us as investors. It's a huge signal that we have to pay attention to, because the fundamental test for next week, as we go into and we see those results hit the street, it will be, has the market learned anything? Or are we setting ourselves up to repeat the same mistake again? That's what I want to talk about on this video. I want to dive in and take a look at what we saw after Micron released their results on March 18th. And are we setting ourselves up for that same mistake when Samsung gets ready to release their astonishing results on April 7th? We're going to dive in and talk about that. But then we're also going to talk about Roundhill's new product, their new DRAM ETF. We'll dig a little more into the specifics, and then we'll answer the question of who is this the best, like what type of individual investor is this the best option for? So I'm going to do that to the end. So make sure you hang on and you listen to that part of the video if you're one of those viewers that are wondering if this is a right fit for you. Before we do that, though, make sure you hit like, make sure you hit subscribe to the channel. I really appreciate you guys spending time on the channel. Let's get started. Let's first start, before we dive into Samsung, let's just remind ourselves of what we saw with Micron overall. And I'm going to pull up the quarterly earnings that hit on March 18th. And we know that this was a shocking result. I think it's probably fair to say it was beyond all of our expectations when this print hit the street on March 18th. There was so many expectations coming into it, and it exceeded everything. They had $24 billion in revenue in the quarter, 75% growth quarter over quarter, and almost a 200% growth year over year. We saw gross margins for the company expand to the 80% range. It validated the demand for high bandwidth memory. It also validated the fact that the supply is constrained and the pricing power that's for them. But we saw some other factors. We saw average selling prices for DRAM go up by over in the mid 60% range for the quarter. And we saw average selling prices for NAND products go up into the high 70% ranges in the quarter. And the revenue for both of those types of products were explosive in the quarter. So it really was an astonishing result. It was one of the best quarters that I've ever seen in semiconductor history. And how did the market react to that? I mean, I almost hesitate to share this because I know it's probably caused a lot of pain for us as investors, myself included, but it's an important part of the story for us to digest. So this table shows you exactly how the market reacted to it. The bottom row is how Micron closed the trading day right before they released these earnings. So they closed at 461.54, as you can see in the bottom of the screen. They shared the greatest earnings in company history. They guided for $10 billion more the next quarter. And how did the market react? There was immediate sell-off. And you can see with the arrow going up, the stock went from 461.54 at the close on the 18th and traded all the way down to 321.80 at the close on March 30th. That is a loss of almost $140 of stock value, a 30% reduction after their earnings print. That's exactly how the market reacted. It had a massive sell-off. Now, we have seen a little bit of return. In fairness, if you look at the top three rows, since their dividend on March 30th, we've seen a 14% increase. We went from 321 and we closed on Thursday at 366. So a little bit of a positive move overall. And I think I've shared on the channel, we still have a long way to go to get back shareholder value, but that is a nice first step. That is what I saw this last week. But I bring up those results because I think this is important context for how the market reacted and what we start to think about what we could see next week with Samsung's, because the results, guys, they were outstanding. And it was clear as I went through all of that, it it was an unbelievable quarter for Micron, but they still had immediate sell-off. Like I said, $140 in share and stock price value in the days following, a 30% drop overall. So it was never about the numbers, the way the market reacted to Micron. It wasn't about their performance. What it was is the market just didn't fundamentally believe it. The market didn't trust the numbers they were seeing. They didn't trust that those numbers would be sustainable. And it really started to question the durability of Micron and the memory trade overall. It questioned how long those margins could actually hold up. It really started to push on, have we achieved the best? Is this the peak that we could see for Micron and the memory players overall? And more importantly, I think what it started to question and why and how it started to treat Micron, it started to treat it like we are in a late cycle peak instead of being in an early cycle expansion. And that's the key. I think that's the big piece that we saw in the market, because in the case of Micron's earnings, the market reaction to those earnings told us way more than we needed to know than the results themselves, than the number themselves. That was the big piece going in. That's a big factor. I think we have to just, a big piece of context we have to be ready for with Samsung's that we see on the 7th. But I also just want to go back and just show you how the memory players did hold up last week, because going into that session last week, they continued to face a lot of negative headlines, a lot of negative pressure related to AI efficiencies, related to macro pressures and geopolitical tensions around the world, and just related to general tech volatility overall. But the great news is the memory stocks didn't break. We saw a little bit of different action. We saw Monday was a negative day. We saw a response. We saw a little bit of decoupling from Micron, the recovery, some mixed price action on Thursday. But the reality was that they didn't act like a weak trade last week. They found support, and they actually grew last week. It didn't break. They actually improved. And that was just, you could take a look at what that 14% growth that I said for Micron, that's demonstrative of that. But let me show you the results, because I think there's a couple key themes I want to point out across all four of those memory stocks. It's important for us to look at and realize, because it'll be important as we dig into the Samsung data in a moment as well. So if you look at the results last week, on the chart you see, it's a candle pattern chart. It includes Wednesday into Thursday. So you see that immediate drop off when Thursday's opening bell rang. You can't even see Micron. It's down below. It's hidden in that red selling volume bar. But where you see the drop off from Wednesday to Thursday. But the key piece I want you to notice, this is important because it's going to be the common theme across all four of these stocks, is there was immediate sell-off, immediate pressure, but then immediate support. So take a look at Micron. That first 15 minutes or that first opening window, immediate pressure, but the stock found support. It rallied back up to that mid 360 range, and it held there throughout the day. So it found support. It didn't continue to sell. It didn't continue to fall off like we saw in prior weeks. It found support. It rose up, and then that support level held. And that's the same theme that we saw with all of them. SanDisk, the same way. SanDisk had an immediate selling pressure, but found support and found significant support. Look at those response candles, those next ones after that. In fact, SanDisk jumped over its Wednesday close. It put up $9 on the board, almost a 1.3% gain overall. But again, it found that support and it held it throughout the rest of the trading session. Seagate, same way. Immediate sell-off, immediate response with support. Seagate put up over $6 on the day, a 1.5% gain. So it found that support and held it as well. It grew over that Wednesday's close. And then Western Digital, same theme. We dropped, this stock dropped, it rallied with the support, and it held it for the most part. Western Digital was down the most, about 1% drop. But overall, this was a strong trading session for the memory stocks, the memory trade. So when you look at those charts for all four of the memory stocks, it's very clear that trade, the memory trade, faced early pressure on Thursday morning in the opening hours. But the pressure didn't sustain. The selling didn't follow through. The support came back, and it came back quickly for the memory stocks. That's not random action. That's behavior. And behavior changes before the narrative does. So the question going into Samsung's preliminary results next week, the question we have to see and ask ourselves is whether the market's reaction will confirm that this shift is real. What we're seeing with the memory stocks last week is real. The market reactions to Samsung preliminary report will tell us everything. Will the stocks hold? Will that behavior continue to be there? Will the support be there? And will the memory trade continue to hold up as we go into next week? So now let's really jump in and take a look at Samsung and what we expect to see, because we know, guys, I talked about it last night, the results that we're expecting are going to be very strong. And I think this is where the market is going to get tested again. This is the key test for next week. Expectations going into this report are already elevated. Samsung is expected to post one of the strongest quarters in semiconductor history. Let me just show you a couple of reports that came out. So you can see here, Samsung expected their operating profit is to be nearing historic quarterly records. And I have highlighted a few things in the article below. You can see they're forecasting their operating profits to be anywhere between 36 billion to 34 billion. And it's all based on the surge in AI demand. It's based on the pricing power for DRAM and NAND prices that skyrocketed over 60%. And just to show you the next one, I shared this last night, but I think it shows you the scale of what we're looking at. So the first quarter of this year, it's represented in that red bar that is off the chart almost. They're expecting anywhere between, I said here it says 27 to 35 billion. I think we're probably going to be in closer to that 35 billion range for operating profit. But just look how it compares to prior quarters. I mean, fourth quarter of 2025 for Samsung was great, but what we're going to see in Q1 is actually double that. So this is the setup that we have going into next week. These are the results that are going to be put and published and put out in the street. And again, I think it's not going to be about the numbers. The numbers, they are not the test next week. The real test will be how the market reacts to those numbers, because we have seen it already. We've seen how the market reacted to Micron's report, the shock of Micron's report, the scale of Micron's report. We saw an immediate sell-off, and we've seen recent stabilization for the memory trade. Now, we're not back where we need to be, but we have seen it stabilize and support come back. So the market doesn't get to say next week when Samsung releases their earnings that it was surprised, that it was shocked. It has seen it already. It has been through the cycle with Micron. So it'll be interesting to see how the market reacts. That'll be the biggest test. That'll be a huge signal for us as investors and help us understand whether the support is there and whether the market truly believes that we have shifted into a structural change and a super cycle for memory. Because, guys, in my opinion, I think the market continues to get Micron wrong. And they're not getting it wrong because the numbers aren't strong. I just think they continue to treat Micron and the other memory players as cyclical commodity players. They treat it as if we've reached a cyclical peak for these companies. They're not acting like we are in a supply-constrained world. Because if we're actually in a supply-constrained cycle, the numbers that we saw with Micron and what we're going to see with Samsung, they are not the top of the cycle. They are just the beginning. And so this week really plays out for me in two ways for Samsung. I think there's two different things that we could see in how the market would. I think the first way would be Samsung reports strong numbers, which we know they will. And we see the stock holds, or even the stock grows, and the overall memory trade grows in response to those numbers. That tells us that the market has started to adjust overall, that it's digested the Micron results, that it is understanding of where this trade is actually heading. If we see that indication in the market, if we see the market respond that way, then that's a great sign for us as investors. And it also tells us, it potentially means that the memory trade is being viewed as a structural demand cycle and not a temporary spike. However, here there is a second option. And the second option is that Samsung reports these strong earnings and the stocks sell off. It would tell us that nothing has changed. It tells you the market still doesn't trust the durability of this cycle. It still sees memory as a cyclical commodity. So again, this week, what I'm watching and what I advise all of the people on this channel to watch is the reaction to those preliminary results when they hit the street from Samsung. That is our biggest signal next week for the memory trade. Now I want to shift gears a little bit and just talk about the new DRAM ETF and address that second bucket of questions that I got from viewers on the channel last night. Because in the past, you guys know that we've had broader semiconductor ETFs, and they've always been a solid way for us to invest in chips, diversify our risk a little bit, and get a broader exposure across the semiconductor industry. But we've never had an ETF that was built to have meaningful exposure in the memory names overall. What we have had, and I'll show you in the past, is we've had ETFs similar you see on the screen, whether it's SOX, SMH, or EWY, which have had portions of memory. EWY is a great example. These are the iShares, the South Korean ETF. You can see the top two holdings there are Samsung and SK Hynix. It makes up about 40% of the weight overall in that ETF, which is great if you want to invest in those key companies. But what happens if you look below that, not only you're investing in the memory, but you're getting exposure into so many other Korean companies that maybe you never wanted to invest in. And so was this the best way to invest your dollars if you wanted to ensure that you were getting a piece of the memory trade? And SOX is the same example. Yes, it's great across the entire tech industry. So many great names there, from NVIDIA, Applied Materials, Intel across the board. You have Micron. But if you purely wanted a memory play, this wasn't it either. It just had a portion of it. It's about 7% of the weight of SOX is in a kind of in the memory trade overall. So Roundhill's new product is a great way to get pure memory exposure. And you can see on the screen here kind of the holdings for the top 9 holdings for the DRAM. This is a precise solution that Roundhill has produced for the memory trade. It is the only US ETF that is offering precise exposure to global memory stocks without any filter. So you're going to get everything from product companies that carry HBM to HDD to NAND products. You're going to have other offerings in DRAM. You're going to have global exposure because you have US companies as well as Korean and Japanese companies. It is a real great way to invest in across the memory trade's biggest players overall. And just to show you, because yesterday we had the first day on the market, you can see where it opened up. So this is 1-day trading, guys. It's a brand new product from Roundhill. And you can see it closed at $27.76 on Thursday, and it's up about another $1.41, 5% in the after hours at $29.17. So it's a low price option if you want to get into an ETF that has broad exposure across the board for memory. Could be a great option for you overall. And the question really was, for as an investor, you're like, how should I invest in this, Kevin? Is this a great choice for me? And I will say from the beginning, that has to be an individual choice. I'll give you my thoughts, but make sure you do your own analysis. Make sure it's the right fit for you overall. I do think that the first thing, just to step back a second, as I said it last night, I think this is a great sign, though, this ETF. It's a bullish sign for the memory sector overall because it's a signal that capital is organizing around this memory theme. Roundhill has a lot of thematic ETFs, so it's great to see memory and DRAM become one of those thematic ETFs from them. You don't get a product like this unless there's enough institutional investment or institutional interest to support it. But the part that I think is important for us to understand as investors too is that the thing about this ETF is that you don't get to pick an individual winner. It is going to buy everything. And that weight will shift based on the performance of these stocks. It's not an equal investment across the board. So if one outperforms the other, you have to wonder, is that the mix that you want individually? Or do you want to pick an individual name? Because that matters for your overall investment strategy. Because right now, not all memory companies are positioned the same way. We know Micron is a big player in HBM, and they're big exposure to U.S. supply chains. And with everything happening in the world right now, that may be important to you. SK Hynix has been the traditional leader in HBM, and Samsung has been making big moves, and they're rapidly gaining in the sector. So the differences matter, and they particularly matter in the supply constrained environment that we're trading in right now. So Roundhill's ETF gives you great exposure, but it also removes the ability for you to be selective, for you to try to pick the biggest winners in the trade overall. So I would say my recommendation for the DRAM ETF overall, and see if this fits in your individual investment strategy and your mindset, that if you believe that this trade is uncertain, if you're worried about this trade, if you think the demand might fade, or you're questioning, have we reached the peak overall? You still love the companies, but you're questioning if we've reached the peak. If you don't trust the cycle, then the ETF makes a lot of sense. This could be a great option for you overall as an investment strategy. You get broad exposure to the sector, and you remove the individual single name risk. If you believe what the data is starting to show us, if you're like me and you're more bullish in the area, and you believe that this is a supply-driven cycle, that demand is not the constraint right now, and that certain companies are better positioned than others to win, then the ETF probably is not the edge you want right now in this trade, because the upside in the memory trade, and the upside is not evenly distributed across the players in the sector. Where I land overall as I kind of take a step back, I would say this is my thought as we head into the week next week. And Micron already proved to the market what the demand cycle looks like with their earnings on March 18th. They've proved it, but the market pushed back. Now Samsung is going to prove it again when they release their results, because we already know the market, we already know the demand is strong. We already know that the numbers are going to be great from Samsung. So this time, the market doesn't get to act surprised. The market doesn't get to say, I'm shocked by these results. So I'm not going to be focused on the headline number overall next week when they get released. I'm watching something much simpler. Does the market finally accept what it's seeing from memory? Does it finally start to accept that the memory super cycle is real? Or will it continue to try to fight against it? And will we continue to see the same response like we saw with Microns? Because if it accepts it, then the memory trade isn't just a good trade anymore. It becomes a structural shift in positioning and a massive repricing trade. And those types of trades, they don't move slowly. Those types of trades move fast. So that's my thoughts today, guys. I'd love to hear your thoughts and opinions. Drop the comments and questions below. I hope you're having a great Saturday. I'll see you soon.